to do with the modern market, that is the crypto market, the NFT market, and how to hopefully make some or more than some money on the internet. Load up a discussion today. We've got Bitcoin hitting all-time high of $124,000 before a small pullback. Got ETH ETF flows seeing another 700 million or more, and digital asset exchange Bullish IPO soaring on its IPO price. We'll break that down all in a bit. We've also got the latest on general price action and a discussion on where we think attention is flowing as usual. I'm delighted to say I've got none other than Signal with me in the co-host seat today. Cannot wait to get into a discussion with her on everything that we just mentioned. But before we do, just a reminder, friends, nothing that we say here is financial advice. The market is incredibly risky and we do not know anything for sure. So please proceed with caution and exercise your own judgment. With that out of the way, Signal, welcome to the show for the second or third time. What time is this for you?
I'm only right now only an hour ahead from you guys, and I've been on your show plenty of times, B-Check. I just always come in as
On
a
video,
speaker
though.
normally time because oh no, actually on video this is the first time being on the
Is
show.
it? Okay.
Yeah, it's the first time being on a show, so it's a pleasure to be here. Thank you so much for having me. I feel like I have enormous feet to fill here, being co-host when Legendary is not here. So as much as I'm not as a degen as much as Legendary, I hope I can fill in at least on what's been going on in the markets and what's interesting. So I'm very excited for this next hour.
For sure, for sure. I mean, we've told you before. I've shown you the screenshots. The people in the comments when you even when you're participating on audio, people like it. They like it. They like the contributions. It's an excellent fit. Funky saying in the comments straight away, Notorious Big Bull straight away. People like Sig. Sig is very. Not saying Sig's in the house. Notorious Big Bull. You're a legend in your own way. Don't compare yourself to Legendary Signal. There's no comparisons necessary. Funky, love to finally see Signal. You're not as much. I guess you used to be on the timeline a lot more, like tweeting and doing more things. You're still part of the morning show, right?
I am still part of the morning show
with the Bodogos crew. So if you want to catch Signal on video and hear more of her takes, that's where you can always find her. They're doing an awesome job as always. Big fans of them. But in the meantime, how's things going otherwise, Sig? Before we get into the main stuff, before we get into the roundup, what's kind of on your mind? How you've been feeling in this market? Any thoughts?
Yeah, it's a really interesting market. I have to say, personally, I've definitely got into the zone of check price. So wake up, open my eyes, and the first thing I do is to check price across the majors, which which always puts me in a very good place. I love seeing that we're back at this time in the markets. I feel like we have waited so long for this. Like it's literally been 3 to 4 years of going through some of the most sort of obtuse, annoying, scammy part of the market. We had to ride all of that just to get back up here. And I feel like the people who've really stuck around have done an incredible job, because it's not always easy to stick around when the timeline is just completely negative sentiment. I suppose right now what I'm seeing personally is I've had a lot of people in my circle who've reached out to me and are now talking about crypto. I want to get into it. Before, they kind of just look at me and never have any follow-up questions, and now they want all my advice, and I'm like, you're going to have to pay for it if you want my time. But outside of that, I've been speaking to a lot of high net worth individuals who want to get into crypto, and I think it's a really interesting time because a lot of them are still like, they still don't get it, they still don't understand Bitcoin. I don't even talk to them about assets outside of Bitcoin. Anyone who is a high net worth individual who doesn't know about crypto, you have to be very careful how you approach them in the conversation. Because if you start jumping into Ethereum, Hyperliquid, and all this stuff that we are into, they will just completely discredit you, because usually these people have a track record of, if they're self-made, a lot of success. And that success, from the ones that I know, have come in the traditional manner. And when you start to talk about investing, and especially when you start talking about crypto, I really only stick to Bitcoin. a lot of them are still sort of like, oh, I've missed it. I heard about Bitcoin like 5 years ago. It was at 30K. I was going to buy a bunch of, crypto for myself and my kids. But then, I was working at XYZ investment bank and I just didn't have the hours in today to get around to it. Now it's at 120K. I've missed it. And this is my conversation I'm having all the time around the fact that they haven't missed it, why they haven't missed it, and just trying to educate them. It's much easier now to have this conversation because the fact is there are vehicles like BlackRock's ETF and several others out there that they can just immediately go to their platform broker and dive into it. But at least the most important thing is that these individuals are recognizing that it's a true asset class within itself, and they're willing to deploy capital, and that the amount of capital is still incredibly conservative, but they're very much still at the education part. So I know everyone is getting extremely excited about the 401k news out of the US. I am very excited about that. But I think it's going to have to be a wave of education as to why this is a legitimate asset class. Asset classes have gone through this. This is not new. Private equity, when it first came out, was an asset class that people needed to be educated into as to why there is yield there. And now crypto is going to go through the same thing. But it's still going to take a while. But obviously the market is front running that news, and that's why it's already starting to get priced in.
I like it. I like it a lot. An immediate question from me that comes to my mind, which is kind of challenging part of the perspective there, is, and this is before we get into the main headlines, which we're going to do in just a moment, but like, why do you think it is the case? You mentioned like the self-made person, right? The self-made person who has been successful in some type of traditional manner. But for me now, having been through the arc that I've been in crypto, I have come to appreciate that in order to make yourself in any way like self-made, you need to like go off and do like kind of odd things way before other people are willing to do that. You need to be like incredibly curious. You need to have some balls to like go where other people will not go, and be open to like, kind of new theories, new ideas. Because if you don't do that and you wait for everyone else to tell you it's fine, like the upside that you are getting is going to be capped because you're too late. And maybe that's fine for people who are already well established, but for the people who are self-made, I just always think, and maybe not saying I'm entirely self-made, or maybe I'm like not far along enough in the journey to get hyper conservative, but would you not remember like the way that you made yourself in that way, like to remember the risk that you had to take, or to remember the perspectives and kind of frameworks of thinking that you needed to kind of create those big opportunities early on, and know that there's always a portion that's going to need to be that if you want to be ahead of the curve, if you want to make some big gains? You're saying these people are like beyond that and they're just trying to get 10% instead of 5% a year or something like that. Like what's your thought on that?
So my take on it is that the people who are self-made have done a huge amount of self-education
Yeah,
of their industry. And that's why they've been, successful in it. But that doesn't mean that risk adjusted return that they're looking for jumps across all areas. They
got it.
still will want to educate themselves on this asset class. And the worst people are the ones in finance. They're the ones who are the hard. I've had much easier conversations with people who have made money outside of finance than people in finance, because they then come to you with questions of like, well, what is the volatility of this asset class versus there? If you look at the Sharpe ratios, and this whole conversation you're having with them,
Do
and
you
you're
know
just
what though,
like,
Sig? For
look,
people in finance, I have no time for them if they have not touched crypto. Just like show them the Bitcoin chart and ask them why they haven't bought any. Like they're experts in finance and money. They're in the business of money and they haven't touched Bitcoin. Look at the chart and you tell me why you haven't bought this asset. At no point in your career have you decided this was an asset you wanted exposure to from a financial perspective. Cannot take them seriously at all. That's my take there. I don't know if that's not going to win you
yeah,
much more business, but
no, it doesn't. It doesn't win me any more business. But I had a conversation with a guy who's in finance, and he was saying, look, I don't have a view on Bitcoin, whether it goes up or whether it goes down. It just does what it does, right? It just does what it does. I don't take a view. I said to him, I'm going to call him Frank. I said to him, look, Frank, you can sit on the fence for as long as you want while Bitcoin goes up or down. But the only thing that's going to happen to you over the next 10 years is going to get a bunch of splinters on your ass because you're not taking a view. And that's basically how I took it. I just had to be quite candid with him in the end
Yeah.
because they are the most difficult people to educate because they think they're smarter than the asset class. The asset class keeps performing. Crypto and AI has been the only asset class this year to severely outperform everything else. And I think it's going to, I think once the traditional finance industry can really start to look at it in that way, and we're already seeing it's like that, but I think when the participants of that industry really start to understand the returns that they're missing out on, they'll start to take it a bit more seriously.
Good luck to them. They haven't figured that out already. Once they understand the returns they've missed out on. But yeah, I take your point. I completely take your point. Is you can't have a finance person not taking a view on the asset class which has outperformed everything forever and ever and ever, or since its inception. Absolutely unacceptable. So right, there we go. That's how you get more business. Sig. Just tell them how it is. Right, let's get into the roundup to get you up to speed with everything that you need to know for today. We're going to get into all of the big headlines too, starting with the price action. As always, just going to share my screen for the people watching. Remember, we're streaming live on Twitter and YouTube. By the way, we're at all-time highs on numbers. You know, I like to give you the metrics before we get into the Bitcoin price. We had, I think, 50 concurrent on YouTube the other day. That's like kind of rare because, you know, we're kind of very Twitter native. 50 concurrent on YouTube, guys. We're pumping. We're pumping for the masses. So just bear that in mind when you're trying to figure out where. I'll keep telling you how many concurrent we have, and you can try to figure out when the top of the market is based on our concurrent YouTube viewers, maybe. So 50 concurrent modern market YouTube viewers, whilst Bitcoin is flat at, hang on, is it already back down to 120? Should go to refresh. That's unacceptable. We hit all-time high 124 overnight, and now it is back to 120, so a little bit of a pullback. ETH is flat at 4,700. XRP is down a couple of percent to $3.20. BNB is up a percent to $860. Solana is up a percent to 202. We have Hyperliquid up a percent to 46.8, and Sui is down a couple to just under $4. On the meme coin side of things, we have a bit of a red day across the board, a little bit of a correction here. Doge is down a few percent. Pepe is down 4%. Pegu is also down 5%. Bonk is down 3%. Pump Fun is down 3% as well. Trying to find anything that is different here. Rect is down 7%. Popcat's down 3%. Useless. That has clearly broken the trend. Most meme coins seem to be down single digit percentage. Useless is up 30% back to 280 mil FDV. So that is something to note. Getting into the headlines themselves. Here we go. We've got Bitcoin hitting all-time high of 124K before, a little bit of a pullback to 120 now. ETH ETF sees another $729 million days of inflow. I'm going to be breaking down just two metrics I'm looking at to kind of gauge where Bitcoin and ETH are going, or just how I'm feeling about them at the moment. And then next headline, which Signal will be breaking down a little bit later in the show, digital asset exchange Bullish IPO soars above IPO price, went as high as 150% above for a bit on its NYSE debut. So we'll get into that a little bit later. So notable price action, Cardano was also up 15% to almost $1. Hype was up a bit more percent, but this stuff's pulled back since we've gone live, since when I wrote this stuff. On the NFT side, we saw CryptoPunk still selling between 50 and 60 ETH. Xcopy Grifter sold for 19 ETH, and Pudgy Penguins and Bored Apes selling very healthily as well at healthy ETH NFT prices. Getting into the roundup itself, we had a Google U-turn on a decision to restrict non-custodial crypto wallets after a post suggesting that it would. You had Coinbase announcing a partnership with Mercurio to drop on-ramp fees to Base, specifically by approximately 50%. Personally, I don't think the on-ramping fees are like that big of a factor. So I'm not sure how meaningful that is, but maybe that's helpful to someone. Paradigm co-founder and managing partner Matt Huang to lead the payment giant Stripe's L1 blockchain. We reported on that just the other day, how Stripe, the payments giant, is having its own blockchain. Looks like Paradigm, one of the biggest VCs, and most successful VCs leader is going to be heading that up. So I think that's pretty powerful combination.
Something I wanted to add to this on this conversation about the
Please
L1
do.
blockchains, because there were a lot of what I saw on the timeline were people coming out saying, why is so and so building their own blockchain? Why is so it was Stripe and Circle, that was it. So it was why Stripe and why Circle, why are they building their own blockchains? And I think one of the points that I didn't hear across the timeline in Spaces or also across tweets was that, first of all, obviously, all of these companies have the capital, they have the prestige, and they are in the moment to capture the value. If you look at where Circle is, for example, they're a custodian. They are essentially paying huge amounts of money to Coinbase for them to be able to distribute their coin, so it's in circulation and is in front of people. But on top of that, you have to think, like, what are going to be the moves of these companies as they enter into crypto? How can they make plays which will add real tangible value to the company? Because having a treasury where you just buy Bitcoin and buy Ethereum, that's going to have diminishing returns. And already you're seeing examples of, like, Michael Saylor, how he's actually capturing and extracting more value from the Bitcoin that he's holding. I don't think many players are actually going to do that. So what I was thinking about was, I think it's a good idea when you have players like Stripe and Circle make their own blockchains, not because of the value that it will accrue today, but the value that is going to accrue in the future. You have to imagine that if they build on top of if they build on a different blockchain, they're giving away value. And what's going to happen is, in like 5 to 10 years' time, someone on the board or someone internally is going to turn around and say, why are we paying all this money to somebody else when we could just be capturing that value ourselves? And then they're going to have to go out and build it. And you see this happen in companies all the time. Whether you've ever worked in an investment bank or worked in a large firm, you will see that along the way, they decide to take an internal decision to get rid of whatever, Salesforce or whatever, and they want to build their own infrastructure. It takes so much time, it takes so much capital. And I think these companies are trying to take both aggressive and offensive. I forgot the two words are, but basically to defend and to attack at exactly the same time, so that as you go into the future over the next 5 to 10 years, they're capturing value and they don't need to make a defensive move and try and build a blockchain in 5 to 10 years when everybody else did that. So I think that is something that I saw that the timeline and people on Spaces weren't really talking about, or was actually viewing these blockchains from a corporate perspective, that it's better to do the hard work now rather than to do it in 5 years.
Yeah, I think I agree with that. Like, I think a lot of the conversation was around why not, and unsurprisingly, I'm sure if you've been building on ETH for a long time, would it be easier for them to just spin something out on ETH in maybe a way that Robinhood has done with Arbitrum, which is kind of adjacent to an L2? Like, sure, maybe that would be nice for everyone. Maybe it would be easier for them. Maybe it would even be more cost efficient in the short term. But I guess a lot of this is to do with, not leaking value and power over the money, right? Like, if you're someone like Stripe, it's just an absolute colossal payments beast. Like, it's just not clear to me that you should. Like, if I was in charge of Stripe, I'm not going to say let someone. I'm not going to. I would be doing the same thing personally. Not that I'm qualified to make that decision, but in principle, the idea is, should you cede power to someone else over the flow of money? And the answer to that question, actually, whether you're in payments or not, in anything, like, I'm in a media company and you're asking me the question, should I cede power if I don't have to over the flow of money? The answer is no. I don't want to do that if I don't have to. And I think they're in that camp where they do not have to. Any further reflections there, Sig, before we?
Yeah, use the example of Robinhood. Just look at the business model of Robinhood. It's in different places. It's not just a payments platform. Like, Circle is specifically USDC. Stripe is specifically payments. So for them, it's very important when, like, we can't be where the puck is, we have to be where the puck is going. Robinhood doesn't have to take 100% play with that strategy, they can build on Arbitrum because their value is captured in different places. So I feel like for companies like Circle and Stripe, this move makes sense. But perhaps for companies like Robinhood, where they have diversified revenue coming in from different places, they don't need to go and build their own blockchain. That's probably too much of a risk for them, and they're better off partnering with someone like Arbitrum.
Yeah. I'm just seeing comment from Mick on Twitter. But holding your own chain is not cheap. I get why they need it. They need to be in charge of their infrastructure and ability to scale, but to build something from scratch is too expensive. L2 would have been a better decision. It's a valid view. I just think money's not an issue. Money's not an issue for some of these companies. And so if they're seeing the potential value in the future, then it's considered an investment. It's like how, I mean, this is not the same at all, but have you seen the crazy numbers, Sig, recently that Zuckerberg is going around like trying to poach the AI employees of like
Yes.
OpenAI? It's like, okay,
Yeah.
is that like, why not just partner with OpenAI, right? Just do it. Just partner with them, integrate them. It's like, no, we need this stuff ourselves. And the reason why that cost is justifiable is because it's deemed to be the case that there's a few things which are so valuable that can move the needle so far. And that industry is going to, the total addressable market of that industry is so huge that that cost of an employee, that investment is actually a drop in the ocean versus the where the market is going and the total addressable market moving forward. So that's how I kind of think about it. I appreciate, yeah, sure. Would it be easier to do the L2? Absolutely. Would it even be exceptionally profitable immediately? I suspect so. But yeah, that's just my view. Final take, Sig, before we keep it moving.
Final take is understand when you see companies put this kind of money into strategic plays, it's an arms race. It's an arms race to who gets there first because only 3 or 4 players can actually
Yeah.
get to the top. And this is why they deploy so much capital. This isn't small fish. So that would be my final take, to remember that this is an arms race for AI and crypto.
I like it. We will leave that bit there. I'll just share the screen again to get through the rest of the roundup to get you up to speed. We've got Anchorage Digital announcing all custody hype, bringing institutional grade security to Hyper EVM. I think that's a really big deal. A lot of people are not familiar with Anchorage because it's on the more institutional side of things in general. They are, I can't remember the name. They're one of the only, I can't remember the exact license they have. They're one of the only regulated people with licenses to do these custodies. I think they're either based in the States or Singapore. I can't remember. I should know the details, but the point is it's very official. This is not like a random team custodying it. So that is worth noting. We also had the largest ever deposit made on Hyperliquid yesterday. This was a fun one to see. It was $100 million was deposited by Galaxy straight into Hyperliquid yesterday. And in a few other bits of news, GameSquare Holdings announced a $2.5 million open market buying of anime, because that's going to be added to its treasury. GameSquare Holdings is this entity that's going to be kind of like an ETH treasury strategy. They also bought a CryptoPunk, so they're kind of on the NFT culture side a little bit. One of the first holding companies that's kind of exploring the cultural side of things, it seems. Azuki also dropped this collaboration with an old Swiss watchmaker, selling some pieces for $25,000, or they're putting them up for sale for 25, with more exclusive ones at 75,000. I am on the screen now. You can kind of see those watch designs there. And then finally, Elon's SpaceX Bitcoin holdings top $1 billion. That's one of the first Bitcoin treasury companies actually doing it in the traditional way, which is the way that I would like to see more people do it, which is the way the modern market does it, which is you make some money, buy a bit of Bitcoin. You don't need to raise capital, create debt, buy Bitcoin, create a like not everyone needs to be MicroStrategy. Just protect your money that you've earned in a hard way by buying a little bit of Bitcoin with the money you have. So that is that. So before we get into the main headlines, any additional comments? I felt like you had a bit of a reaction to some of these watches.
Yeah, the watches have me. The watches have
Do you like
me.
them
Oh
or
my
not?
goodness. So I am a watch person. I
Oh, you
do
are?
like
Okay.
my watch. Yeah, I have a couple, but I like, and I know this space is massively into watches, but it's a really interesting crossover of uh like crypto Azuki meets old Swiss watchmaker. I feel like it's like really niching down because crypto and watches, I get it, but crypto Azuki, I get it. But then this particular design, I'm like, who is going to be spending 75K to flex that watch? I just feel like, oh, and also I feel like with Azuki, it's just been they've obviously made their community a lot of money, but is this the move they should be doing right now? When I look at like, for example, how Spencer is operating right now, and how Chimpers are operating right now. Like you're seeing that there's such like positive momentum behind these collections that people feel like, and Pudgy's obviously that people feel like they are doing something and they're moving the needle and people can see prosperity in their future, by holding these assets. I feel like with Azuki at this moment in time to be so extractive isn't the right thing to do. I don't think this is the right offering. I'm not in the Azuki community, so I don't know sort of what the community holders thought about this, but I just didn't feel like it was the right moment to drop this kind of limited edition collection. Given the momentum the space is having, I feel like this should be a time when they should be adding value to the NFT collection and not being extractive, trying to take more money out, considering they've already done that with the skateboards.
Interesting take. I'd probably go the opposite direction. I don't mind it. I'm actually not a watch person, so the numbers kind of mean nothing to me. I understand that people will want to pay these kind of numbers for watches, and if anything, the Azuki community have demonstrated their desire to spend that kind of money, whether it's with the skateboards or other things. I think they're one of the groups of people that do like this kind of stuff. However, I think I just kind of think, I love what Chimpers, for example, are doing, and I love what Spencer is doing at Moonbirds. Obviously, kind of following in the Pudgy Penguins playbook, where it's like, look, get all this internet attention, build up the following, build up the gifts, get people, get your IP going viral, and then sell stuff on the back of it. I like that playbook. I just think the Azuki playbook is just different. They're going for this more artful direction where there's these longer pieces of anime being produced, and then it's very much like curated drops of, yeah, I agree with you, very expensive things. And in the end, I actually think it's okay. I mean, would I buy it? I'm not in that community, so and I'm also not a watch person, so it's not for me. But I think it's kind of okay for people to just pursue their own business model. I suspect they're going to make a ton of money out of this because people will want to buy it, and everyone else can hate it if they like. But if it keeps their brand moving and it keeps their business model operating, I actually kind of don't mind it. Something I mean, just for people to get some perspective on how I think about the business, even from a media company's perspective, I actually just really like the idea of doing. A lot of these brands are in the business of mass consumer, because they want the most numbers possible, the most clicks possible, the most eyeballs possible, and then you have to sell something to them that's like reasonably priced. I actually love the idea of having fewer, super fans, fewer partners, fewer sponsors, but upping the price because the value prop, for whatever reason, is more premium. And so from a business perspective, I love the more premium, the more premium angle, where it's like fewer people, higher cost, same profit as maybe the other teams, but just different model. That's my take.
Well, the thing is, you say that, but you have to look at what did the market say about this? I
Yeah,
haven't checked the anime price.
let's check.
I haven't looked at the NFTs, but what I did see was Wizard of Soho yesterday shorting the hell out of the price as it tanked, and I also see that the NFTs went down. So I have my personal opinion that I don't think this was a good brand move from them. But you also have to look at what the market has said, and if the market is in red, I feel like that says what the community feels, and also like if they wanted to do the partnership, I get that, but they could have they have a badge, kind of like a badge, earn badges within the community, and they easily could have like given some of these watches out to some of their super fans within it, as well as come out with a partnership at the same time. So you drop the collection and you also give out, I don't know, one or two to the community. It like, even that just would have felt less extractive. It just feels like they're trying to take money out of the community on the way up. And I don't know, will Azuki be around in 3 years? I'm going to say no. Is Pudgy's going to be around in 3 years? I'm going to say yes. I'm doing, you can clip this. We'll have receipts in 3 years. But yeah, I just got bad vibes from this drop.
Okay. Let's see that. So the market is saying, so Azuki's down 15% on the day, down to 2 ETH from around 2.4. I think it's fair to say that is connected to the drop, because short ETH has been going up in general, but that's been a more sustained thing over the week. ETH went up to, Azuki's were as high as 2.5 at the start of the week, and maybe it was going down in line with ETH going up. But yeah, there's a pretty steep drop in the last 24 hours. So I think that's fair. Okay. Different opinions there. I kind of don't mind it. Sig is against it. We will clip it and we'll see at some point in time. Good to have some differing opinions. Sometimes going to stop sharing the screen there. Let's get it back into, I had this question for you, Sig. So before we get into the headlines, I wanted to dive into two important or interesting tweets that I saw in the last 2 days. In fact, maybe we'll just do the first one because I think that's the one that will be of most interest to people. We've got this tweet here from Chris Beniski, who is one of a very respected investor, crypto participant for a long time, kind of laying out some predictions for where he sees the market going in the next few months. And so I'm curious for what your thoughts are on this. This is the tweet. The tweet is this: aiming for an October top in Bitcoin. If I were to pick numbers, which we all know is a grade above guessing, I'd say Bitcoin 142K, ETH 6,900 to 8, Sol 420. Not financial advice, it's a meme world that we live in, but just expanding the thoughts a little bit more. He said that would be a 20% move from Bitcoin here, 40 to 60% move for ETH, and a 2x for Sol, which adds 500 billion to Bitcoin, 230 to 350 bill to ETH, and 100 bill to Sol, all circulating. I said I also like the implied ETH BTC and Sol BTC ratio, so it's expecting ETH and Sol to continue to gain against Bitcoin. Some further thoughts: the crazier prices get in August, September, October, the more conviction I'll have in an October top. If we pull back hard soon and get more muted, then perhaps we can extend this bull for longer. Curious for your thoughts here, Sig. Do you think the party can end as soon as October, or do you think we pull back a bit and therefore extend for a little bit longer, or do you have a completely different view?
Yeah, August really feels at the moment like, that saying, when the cat's away, the mice will play. And it feels like, obviously, the cats are tradfi. No one's taking decisions over August. PMs, presidents, this is when they take their break. And we're the mice, and we're the ones who are playing, and we just think that the music is going to continue forever. But the thing about September, which I can't quite grab my head around, is with rate cuts. I know everyone is pricing them in. We're seeing now 50 basis points, etc. But we still have the tariffs, which is why Powell and the board are being so conservative with interest rates, because we still haven't seen the historical lag data of how that's impacting inflation. So I know the consensus view is that there will be rate cuts in September, but I do think that Powell is going to continue to steady the course that he's had and act with integrity, and perhaps not do any cuts in September. Now, I know I'm like pooping on the party because everyone on CT thinks there is, and I might be completely wrong, but I think that the tariffs are important data that Powell is going to take into account. There, for that reason, if we don't get rate cuts, I don't think we sell off aggressively at all, but I do think we could still see a bit of a pullback there. If we do have rate cuts, I think it's a huge blessing if we get to the numbers that he's talking about, this 140 to 150 range, which has sort of broadly been a kind of consensus view of where Bitcoin could go in this cycle. But that would probably be around the top. So I don't think 142 is out of the question. I don't, but I do think that what happens in September is an important piece of data into whether we can reach it. ETH is just doing things that people didn't expect it to do. So saying 6 to 8, I would be on the 6 range rather than the 8 on there. I think it's going to continue to have price discovery. I think it has ETH and BTC have the strongest narrative. You always have to remember there are only two major ETFs, Bitcoin and Ethereum. So those are only places where inflows can go. So I do think 6 could be. Do we get there by October? Yeah. I'm going to say no. I'm going to say no for October, but I think it could happen this year. And then Solana, my biggest concern is with Solana is that why should institutional inflows go there at this current time? It doesn't have an ETF. And so when, all of us are looking at this data, oh, Ethereum has had 1 billion of inflows this week, Bitcoin slightly less, slightly more, like these are really important data points. And Sol doesn't have that. So for it to do a 2x from here, I'm going to say no, just because it doesn't have the institutional inflows that Bitcoin and Ethereum are experiencing now. But that doesn't mean that I'm saying it's not going to go up. I think it's going to follow the momentum of the dominant majors, but I don't think it's going to get to 450 by October.
Okay, a lot to digest there. I'm going to take a couple of points and I'm going to wrap up the stuff that I was going to talk about with Bitcoin and other things just into this. You mentioned the rate cuts, which is obviously, I think, a crucial part of the price action. In fact, okay, you mentioned ETFs and you mentioned rate cuts. Just sharing one set of data from CoinMarketCap on like the flows at the moment. So like what you'll notice is the complete and utter domination of ETH at the moment. And therefore it's unsurprising that ETH has outperformed so hugely in the last period of time because ETH has entirely overtaken Bitcoin in net inflows. In the yesterday even, you had Bitcoin with 86 million of ETF inflows and you had ETH with 729. And you can see on the chart here, the blue is ETH, whereas the orange is Bitcoin. And ETH has just been dominating for the last few days. And if you look at it on a longer time horizon, obviously you can see way more orange, right? Because it was always Bitcoin doing things and nothing was going into ETH. So there's clearly been a shift in allocation here. So that explains this trajectory that we're on. I actually don't see a reason for that trajectory to stop. Purely on the ETF side, I think Tom Lee is doing like an incredible job for ETH, being the Michael Saylor of ETH. I don't see a reason for him to stop at this moment in time. And so I think that can continue for a bit. To your point about September and a pullback, I was saying on the show the other day, I think, what was your analogy? The cats are away, the mice are playing. I think the mice are running wild at the moment, assuming that there will be rate cuts in September. And so I do think there will be a pullback when those things are announced because everyone is already operating on the basis that there's going to be a cut. You can't have the run that we've had, which everything is up so aggressively, so much, and think that the upcoming rate cuts have got nothing to do with it. Like that is at least a significant reason why we're moving in the way that we are. And so I think when it actually gets announced, I think at least a proportion of that is priced in. So therefore, I do think we have a little bit of a pullback either in September when it's like officially done at the next FOMC, or sometimes Powell at this Jackson Hole event starts to signal what they are intending to do in the future. So maybe you could see a little bit there as well. But what you've also seen on the rate cut side in the last 24 hours is this kind of calling for a bigger rate cut, which is actually, I think, super tactical. So you had Scott Bessent calling for a bigger rate cut yesterday. I'm showing this article which quoted him saying the Treasury Secretary Scott Bessent on Wednesday said that interest rates are too constrictive and that rates should probably be 150 to 175 basis points lower. He added, there's a very good chance of a 50 basis point cut. We could go into a series of rate cuts here, starting with a 50 basis point rate cut in September. which I think is
I'm sorry.
hilarious.
I just sorry,
It is
Peter. I just
hilarious,
have to
right? Go
stop
on.
you here because Scott and Trump, Trump has spoken so, candidly about Scott, about how he does it, how he does a fantastic job. So you always have to kind of remember that Scott is a mouthpiece for Trump, right?
Of course.
So saying that we could get more rate cuts, we could get 50, 100, I'm going to say it's unprecedented that first of all, those two parties are independent, right? What Powell decides to do with rate cuts is what he decides to do with rate cuts, and what the president decides to do with fiscal policy. And the two should not mix. The monetary and the fiscal policies of each side should not be mixing. Yet here we are today with this current administration who do many things which are kind of a bit, left field. And here you got the Treasury Secretary saying what rate cuts should be. Yes, they can spin that narrative in the media, but that doesn't mean that's what rate cuts are going to be. And we know these two parties are antagonistic. So the more I hear Trump's side saying we should be doing rate cuts and they should be 50 basis points higher or lower, the more I think this is absolute noise for Powell. And he's going to continue what he does, which is look at the data and take a decision based on what the data is. And this is why I keep going back to tariffs. We need to see how that has progressed, and that will inform what the decision would be. Looking at what the media says about the Treasury Secretary, it's basically looking at what Trump thinks should be
Yes.
happening to rate cuts, which we all know is he wants them to go down.
Yes. I think one of the reasons they're doing that is to anchor that number in people's heads to try to make the Treasury, and I don't know why these games would make a difference because it already seems Powell will do or will try to do whatever he wants to do or whatever he thinks best. Try to anchor it to 50 now so that 25 seems like, okay, fine, we can. I'm okay with doing 25. It can't be 50, but like, maybe 25 will work. But interestingly, on Polymarket, and again, this is kind of just being a little bit speculative about this stuff. On Polymarket, after those comments, you had, people are speculating on the Fed decision in September. You've got a 20, to be fair, you've got a 25 base points decrease is up at 80%. So like a lot of, that is, the market is very much kind of leaning in that direction. But you did have a bit of a spike on the 50 basis point decrease to around 8% from, I think it was 4 or 6. So I don't think the market is thinking that's likely, but you had a little bit of spike there to kind of speculate in that direction. Okay, so that's a bunch of our thoughts on that direction. Final question here, Sig, because I want to give you a chance to speak to Bullish, which is this IPO, and I want to talk about like IPOs in general and your thoughts in that direction because we've got a lot coming up in the market soon. I understand why people think like we're near a top, but like if you had to articulate the reason why, what would be the reason? And the reason why I ask this is because I'm feeling like there's a lot of top signal type of stuff going on, but then the thing that pulls me the other direction is that it's Trump in charge. They're a markets administration, right? They want the market to go up all the time, and they're willing to put pressure on the Fed to get what they want. They want the markets to go up. They want the markets to go up, and they've got a long time in charge still. Like I feel like purely from a political perspective, October, November this year is just too soon for things to tank. I mean, there's one thing things cooling off, and there's one thing's like this is the top. We're going to tank, and actually, I just don't see a catalyst for a complete turnaround immediately. Curious for your thoughts there. Like, what would be the reason for that to be the top suddenly?
I think so. I've been thinking about this as well as to because I do feel that there's like a lot of euphoria on a timeline, and I am part of that myself. I am loving this time right now. But I was also thinking back. I want to say about 4 to 6 weeks ago when Bitcoin went up again, and it was a bit frothy, and there was a lot of euphoria, and then we went back down. And I was thinking to myself, why didn't I sell? Why didn't I sell at that point? And so how I'm navigating this sort of current environment is I'm just thinking to myself, I don't need to sell everything. I don't need to exit, but I can definitely be using this euphoria to sort of sell at like start to partially sell out to some of my positions, because I'm never going to time the top. But I can definitely tell we are in a very euphorious and happy moment where everybody is doing P&L screenshots. And you're seeing, well, we're going to talk about it soon. We're seeing, IPOs like Bullish just and Circle, and there's more coming. So you can't really ignore the signs that we are going upwards. But if you don't want to try and time the top, at least I'm thinking about profit taking.
Yeah. I'm wondering whether maybe this is what I'm thinking. I think when there's no more money left to be made, when people are up a lot, that is when they will sell. And I think a lot of the given that we're in an institutional cycle and they're driving the flows, when do they want to sell? All of these IPOs are coming to market. When are they allowed to sell? Obviously, they're locked up for a period of time. This is something we need to look into. And maybe this leads you into the next conversation. But when Circle goes down a lot, which it will, I think, then maybe that's like the beginning of the end. When these IPOs start losing steam, crypto becomes less a hot, interesting commodity, and it just needs to lose steam, because I don't like Bitcoin might go down a bit from here, but that is, as you said, there are loads of people still encountering Bitcoin and finding it interesting. Like this, I don't see that as losing steam. I do think some of the more nonsensical IPOs or these treasury companies like that will definitely lose steam. So I think that's the only thing that I'm kind of keeping an eye on, because politically with the midterms in 2026, like I just think there's a lot of time left in the market for the good stuff. And maybe there's not even the same 4-year. I'm not convinced on the 4-year cycle thing anyway, which I think does suggest October 2025. So I'm not entirely convinced by that anymore. I think we've probably moved into something slightly different. But final take here, Sig, or do you want to go straight into Bullish and let us know what we need to know from this IPO?
Yeah, let's go straight into Bullish. So yesterday we had Bullish, the cryptocurrency exchange. They IPO'd on the New York Stock Exchange. This made the headlines mainly because it is backed by the notable investor Peter Thiel. What was interesting is that it was meant to come out around like $28 to $31, which would have implied a pre-IPO of around $4 billion, but instead it came out at $37, and then it surged more than 200% up to $118 before pulling back to around $68, which has pushed their market cap to $13 billion. Now, what was interesting is that both B-Check and I were talking about Bullish before the show, and we were both saying, have you heard of Bullish? Like, has this been on your radar? And,
What the
we
hell is
both said,
Bullish?
yeah, I've heard of it, but what the hell is it? And why is it surged like this? One of the reasons why it surged is because good old Kathy Woods came along with ARK and invested a substantial amount of money across her 3 ETFs. So I think really what's at stake here is that you've got companies like Bullish, like Circle previously, who had a very difficult time trying to IPO. Circle tried many, many times to IPO. They failed until this year. Bullish tried to do it via a SPAC as well. That didn't work out. And it's only now where you have these positive tailwinds and macro tailwinds and political momentum that is allowing these large crypto exchanges to come into the market. Bullish is different from Coinbase in that it's very much institutionally serves clients. Coinbase is both institution and retail, and Bullish is really for institutional investors, hedge funds, individual quantitative traders. But that is the market. That is where they've come on. And I think the most interesting thing about this IPO is that we're going to continue to see this. We're going to continue to see. I'm sure we're going to see it with Kraken, that it's meant to come out at $30-something, and then it goes and surges and does much more in the market. And going back to your point, B-Check, yes, we have this perfect environment for these crypto IPOs to come on, but can they stay? Can they stay at these current valuations? That is the big question. they are going to have to continuously add value in a way which they are not doing now to be able to hold these valuations when this frothiness goes away. That's what I keep thinking about. However, that does not mean that you can't make money with this investment. I think what's really interesting is about the people who've been turning up to this space and really understand the opportunities are actually their own active manager. You are literally your own active manager within crypto. It was something that I was thinking about when I saw how much Kathy Woods has sort of scooped up to put into their ETFs, is that essentially everybody else will be a passive investor having to pay a premium to be inside crypto. Us, because we have the knowledge, can be our own active investors inside crypto and capture opportunities which are not only off chain but on chain. Like, so if you know that there's going to be an IPO of a company, you can literally just go onto your brokerage firm, buy it at like $50. If you can capture it at $50, you know it's likely going to go and 2x, and then just exit. That is how you that is how you capture alpha, right? And so if you really understand a space very deeply, you can take opportunities anywhere. You don't need to be some special accredited investor or anything like that. You can do it on chain and off chain. And that's what I keep thinking about. How long will this kind of environment actually be there for us? I do think it's there for the next 6 months. I do think as we continue to have this momentum, you'll be able to capture these kind of sort of off chain, on chain opportunities. But it's happening for names that we've never even heard of. That's the thing. And then on the other side, what I thought was really interesting, here comes Bullish with their amazing, 2x out the gate, even more than that. And then you've got Coinbase selling off on earnings, down almost 20% because they didn't hit what Wall Street thought that the earnings should hit that quarter, despite everything that they're doing. So if you look at what the leader is doing and how new entrants are being treated, you know that there's going to be those marginal gains are going to diminish over time as Wall Street doesn't see that their earnings are keeping up with their valuations. And that is something that I always have at the back of my head. But right now, you can easily make an opportunity, do a Kraken IPO or anything like that, trade in and out very quickly. But just bear in mind that at some point, the hot potato is going to drop and you'll need to get rid of these crypto exposure. Otherwise, as well, you end up, I think personally, having too much crypto exposure. You've got treasury companies in your portfolio, you've got crypto exchanges, you've got the actual underlying asset. That's a lot of overall exposure that I wouldn't want to have in my portfolio. But these are some of the thoughts that I was looking at when I was looking at Bullish versus Coinbase at this time.
Okay, that's super helpful thoughts. I've got two things to say in response. One, kind of tying back to a different thing you said earlier. I don't know when the top is. It definitely feels like there's some speculative stuff going on. I've said before on the show, like DCAing out over time is the best thing that I did in November, December, January last year, of admittedly like even more riskier coins, but just taking a bit off every day or every couple of days into some type of combination of stables and Bitcoin or something was the best thing that I did. You don't miss it in the end. Like I don't, but I'm also very good at never calculating what I would have made. Like I just don't do the calculation. What would I have done? What would I have made if I held whatever random thing? I just don't do it. There's no point in it. It's not valuable. You make your profit, you go out in a responsible way, and then you live to not just fight another day, like thrive another day, because you're in a stronger position when the next set of things happen. Because I did that, I was able to enter Hyperliquid in a way bigger way than previously. Second thing, really important on these IPOs, I think they're taking a little bit of a, I mean, maybe this is always the way. I don't come from a traditional financial background. I was a lawyer before, but I wasn't on this side of things. But to me, all I see when I see these details of the float and for these IPOs is I'm just thinking of VC crypto style things. I just asked Grok what the Figma float and lockups were because I saw something about it on the timeline the other day. And it's pretty ridiculous, to be honest. Like, so post IPO, you had Figma run from $33 to $115. I think that was literally on the day. But the reason is because of the float. So only about 42.5. So this is coming from Grok, by the way. So you need to double check this data. About 42.5 million shares were made available to investors during the IPO, representing an 8.71% public float. So there's low float, high demand. Like 8% float is as low as anything in crypto. In fact, it could even be lower, frankly, because some people in crypto have decided we went too low. No one's going to buy the token because they know people are going to sell on top. Let's just go higher, and then like figure it out after. We need to generate more demand and whatever. But the point is, that's a really low public float. And then lockup periods. So Figma's IPO included a standard 180-day lockup period for insiders and certain shareholders ending on January 27th, 2026. So 6 months roughly of being locked up and then being able to exit. I don't know the extent of the sell pressure or how many of those locked up. I mean, it's obviously not going to be all of them in one go, but it's the same game. Like, you have early investors, you have shareholders. They are not allowed to sell on day one. You only provide a certain number of shares out to the market on the first day. People are bullish, so they'll just buy it at any price, right? They just want to hold the share. But you've got all of the sell pressure to come. So is this the right thing for me to be looking at, Sig? I become very skeptical, I guess, when you see these kind of dynamics between the float and the lockup period. What do you think as we kind of close out today?
I mean, overall, you can certainly go into sort of the underlyings of all of these companies, and within crypto, you're going to get your winners. You're going to get your winners of the corporates who absolutely dominate this space, but I think you have to be extremely cautious in how you select them, and bear in mind that there are a lot of traditional names that have not IPO'd yet and could easily usurp the incumbent, which is on the stock market. But overall, the way I'm thinking is that personally, I don't need any more crypto exposure on top of what I already have. I think holding the underlyings is volatile enough, especially when you're going through a bear market. And so when I look at companies such as Figma, or you're looking at Coinbase, you're looking at Circle, you need to look at what is their overall business, what is the product or service they have, and what is their specific crypto play. Like, how are they adding value through crypto? Are they just doing it because of the accounting standard that's changed, which now means the number is positive on the ledger rather than it being negative, because that number can easily change later on? What is their moat? Like, when I look at the treasury companies, I'm always thinking, well, what's their price moat? The reason why MicroStrategy is able to do what MicroStrategy was able to do is because they bought Bitcoin at a very low price, and you have all these players who are coming in much later, buying at a much higher price, and they're just reaping the benefits of the new accounting standards. So I just think there's a lot of moving parts that you need to think about when you're looking at traditional corporate companies coming on the market. How are they being valued in terms of what is the underlying value that they are adding as a product or service outside of the crypto asset going up? And then second of all, do you think that over the long term, like so over the next 3 years of Trump's administration, can they actually have positive uplift? That's how I'm looking at these things. For me, the question is, would I have bought it if there was no crypto? Would I have bought Figma if there was no crypto and held it? That's a question that I think you need to ask yourself as well.
Okay, so thoughtful questions to ask yourself as we close the show today. Signal, thanks so much for joining us. Just for everyone else, before we give you Signal's details, we do this every single day, Monday to Friday, 7 a.m. Eastern time for an hour, live on X video, YouTube, Apple, and Spotify too. Sig, it's been a pleasure to have you with us. Just going to share your profile here for people to catch up with you if they don't know you already, but based on the comments, a lot of people do. I've enjoyed you joining us today. It's @_the_signal on Twitter. Anything else you want to share about what you're doing, what you're up to before we close out?
No, I'm going to close out here, B-Check. It's been amazing. You can find me at _the_signal on Twitter. If you have any questions, always feel free to DM. I will reply.
There we go. Thanks so much for joining us. It's been a pleasure. And thanks so much for joining us. As always, we'll be back again, same time, same place tomorrow. Have a wonderful day. Take care. We'll see you tomorrow. Bye-bye.